Hey everyone, welcome back to another episode of the podcast. This week I'm with Soane, and he is lighting it up, and we are going to dive in here. I can feel a bit of echo. Can you hear the echo? That's not good.
Who's echoing? Is it you or me?
Echo. Oh no, it's gone. It's gone. We're back in. We won't edit that out because I just leave it all raw. So yeah, anyway, Tom, welcome. You've been on your podcast several times. I think this is the third time we've actually spoke. So my turn. I think the first time we did a dual podcast, didn't we? No, first time we did. Then I think we did a dual. Now you're on mine. So here we go. Let's thrash it out.
And now we're basically BFFs, aren't we?
yeah. I mean, deep down, yeah. You know, brother from another mother and all that sort of stuff. I kept my hair though.
Yeah, thanks.
But yeah, how have you been? How have you been, buddy? It's been about 3 weeks since I spoke to you, but how have you been?
Yeah, really well, mate. Really busy. I've bought a ton of properties over the last few months because I think certainly in your area, I think there's going to be a really good growth up that way. So I've been buying as much as I can, growing my business as well, and doing the podcast. It's been crazy, you know.
I know. I get to like a new level each week. I'm like, is this journey ever going to slow down? And it just seems to get faster and faster and faster. I mean, it's all good. I'm not complaining at all, but you know, it does seem to be, you know, just the people I'm meeting, the networks I'm creating, you know, the JV partnerships I'm striking up, and you know, the avenues the business is going in, and just everything seems to be like on steroids at the minute, and I don't know why. But as I said, I'm not complaining too much. So obviously, typical Southerner wanting to buy all the property up north. Everyone seems to want to creep up here, yet they don't want to live here because it's the worst place in the world. But so where have you been buying, may I ask?
I've been focusing on houses, and I've bought my first. I should have probably told you about this. I bought my first serviced accommodation property. So really excited about that. It's near to Hadrian's Wall. It's a massive, great big apartment, which I've picked up at a decent price, and I'm going to do a flip to let on it basically, but serviced accommodation. So really excited about that. The other ones are, generally speaking, I do most of my stuff is flip to lets or BRR, whatever everyone calls it, where I buy it, do it up, refinance it, rent it out. So I bought, on Monday this week, I completed on 3 all simultaneously. Friday before I completed on 2. I've just keep going. There's a few more going through legals right now. Probably going to complete on 1 tomorrow.
I think a good topical question around that is, you know, typically the game's quite tough out there at the minute, you know, for this strategy in particular. You know, the market's very hot. The prices are not really coming down or being negotiated on. So you have a very strong deal sourcing background as well. How are you still managing to sort of maneuver through that?
Over the years, I've kind of connected with a lot of good sourcing agents. So I'm not really a sourcer myself. I would probably classify myself as not only an investor myself that works through sourcing agents, but also as a property broker. Well, as you know yourself, you know, you get offered all of these properties that are really good deals, and you're not going to buy them all. So I tend to have just a few investors around me that also want to invest in property. So if I get a really good deal that's, you know, a nice cheeky little 15% yield or whatever, 20% yield, but I'm not buying at the moment, then I've got a little circle of investors that will buy them, and I just pass them on and connect them up with the sourcing agent. So I'm more of a broker in that sense. But certainly the way I've kept going through is by expanding my network and talking to more and more people, doing a bit of due diligence on more and more sourcing agents and getting to know areas of growth. Like there's a guy called John Penquit. You might well know him. Down in the Welsh country, if that's that's my best Welsh accent.
Never do accents. I'm terrible at them as well.
But he's like a data geek, and if you follow him, then you'll get a bit of an idea of the sort of DD due diligence you can do on finding growth areas and development areas. He won't mind me giving him a shout out either.
Yeah, no, it's hugely important. I mean, network it's something you don't even think about, or you think it's just what people say when you're starting off, right? But the more you go through it, you realize how important it actually is, and how far it can make you go. You know, it is super important to start building your network. And by that, I don't really mean, going to a pin meeting and sitting at the back and and every now and then exchanging numbers with someone. I mean, there probably is some benefit in that, but the ROI you get from it's not half as good as building your own network, actually having it as a plan in your business to be proactive in building that network. And that's definitely been I guess the backbone of where I've got to, and where I'm probably going to go in the next 12 months, I think. So your SA, are you going to be running that yourself? How is that going to be managed?
I think you are actually, mate.
Good. Sounds good. Yeah.
That one. No, you're right. And what you said earlier on about growing your network, I totally agree. There's so many people that sit here on Facebook, and they're probably watching us right now, that think, oh yeah, I want to start getting to know people that can help me in my property journey, and so on and so on. But you're on Facebook. And, I think the first rule, if you want to invest in properties, then the first thing you should do is tell people that you want to invest in properties, right? And so when I first started out with this, I started talking to letting agents, funnily enough, first of all, and started building up contacts with letting agents around the country in the areas that I wanted to look at. And then you normally find that the letting agents, if there's a sniff that they're going to be able to get a managed deal, then they'll help you find the right properties. And they're not going to find you a property that they won't want to manage. So certainly for buy-to-let properties and flip-to-let properties, you can get such amazing free information from letting agents. They'll also tell you the rent values. They'll also know a bit about the sales. So they'll know whether there's demand, whether you can have a good exit route. If you're going to buy a place, you want to be able to exit quickly if you need to. No point buying a place if it's not able to be sold at some point. But yeah, letting agents is, if anybody was looking to expand their network and find really good property deals, then go after the letting agents. And then the letting agents will get you into the estate agents as well. But no, first just SA. Sorry, that's what you asked me, wasn't it? Service accommodation, yeah. So
why did you want it? Why did you want to buy a service accommodation unit?
Well, funnily enough, it's a bit of a journey for me. It's kind of the plan. And when I first started out in property investing, I went after safe but profitable buy-to-lets and flip-to-lets. I did a load of flips myself as well, just to build up the cash pot as well. But generally speaking, my focus was to invest money in flip-to-lets. So that was kind of safe and profitable for me. And then once I've got a nice portfolio of properties generating a good income, I then diversified into my first HMO, which I'm really excited about. It's an awesome HMO, purely because actually it's extra exciting because of the boom that's happened up in your neck of the woods in the Northeast. Because I bought it for 90 grand, and it's a big 5-bed HMO.
Anyone down south, that is actually a house and not just a room.
Yeah, right. I know. So I bought it for 90 grand. And the most recent comparable property to it was exactly the same size, exactly the same everything, was just sold for 187.5. And that's mind blowing. And also, I'm going to keep it anyway. I'm going to refinance it. I'm going to keep it because it brings in about 2.5K a month. Anyway. So that was my first diversification, a bit more risk, but more reward. But luckily my contingency is my portfolio. Yeah. And now I've gone into the serviced accommodation, which is more reward. So at the moment, you could probably say that there's lower risk on serviced accommodation than normal because we're going to have a load of people staying in this. Well, staycation is the general term, isn't it? But my calculation basically puts it at a yield with a contingency that is very comfortable for me. You look at worst case scenarios, I still make profit. So And that's the key, isn't it? If the worst happens, then you can make profit.
Yeah, I think the profit margins on SAs, when you get them right, are well north of 20%. But I think one thing that a lot of landlords don't factor in is I don't know what, I mean, you've got a big lettings agency, you can probably every 16, 17 months there's a change in tenancy, something like that.
Average tenancy across the country is 44 months, but that's going to be lower if you've got, say, a first-time renter's property like a one-bed flat or something like that. Higher if you've got, say, a three-bed house. It's probably pushing more towards the 8-9 years on the bigger properties. But yeah, you're right. Yeah, so go on.
And then you've got a couple of months, maybe at best 3 weeks between changeovers, because someone's in your property for 44 months, it's going to need a refurb, especially if they haven't told you that, the extractor fan went in the bathroom 3 years ago and the damp's all up the wall and all that sort of good stuff. So, when you factor in over a period of time running SA on the same level, not only is the cash flow greater, but you also, because you're doing minor maintenance all the time, you never have these major maintenance bills. And there's never a void, there's never void periods. And up Hadrian's Wall way, we've got some stock that way. And, the summer months are like, you're like mental money, 4.5, 5 grand for a 2-bed house. And, it's just crazy money. And, that's almost like, I mean, even now to this day, I still see some of the transactions going through the business for some like 2-bed dormer cottages in Sunderland, or a 1-bed flat in like the middle of Fenham or somewhere like that, and you're like, or like 2-bed flat in Birmingham. You're like, how is that generating that money? But it does. But hey, it's not been rosy. There's been ups and downs, especially in the last sort of 14 months or so. And that was, I remember March the 23rd or 26th very well, when Boris announced that the country was locking down, and all I saw was my phone light up with cancellations. So that wasn't very clever, but yeah, no. So you've basically started on the drug. You're going to be hooked on it very soon, and you'll not buy anything else but SA units after that, I would imagine.
Well, you're absolutely right. I like serviced accommodation for sure. Because it's exciting, and if it's managed well, then you make a good yield, and you always calculate a contingency. For me, I'm a bit of a maths geek myself. I think you are too, actually. But maths geek for me is all about contingencies and yield. So if I'm going to buy a property that I'm going to rent out as a holiday let, then my contingency or my backup plan is that, am I going to be able to rent this out as a standard residential if the holiday market goes tits up? Or am I going to be able to sell it as a standard residential property and still make profit based on the investment I've made? But you're absolutely right as well. I'll tell you what, funny little story. I would have got into SA maybe 6 months ago, and I was offered a block of, as a terrace of 4 cottages down in the south of Wales. And it was a stunning place. This is the holiday destination of Wales. And this property was in the prime spot. And I was picking it up for an absolute steal. Well, it sounds a lot, but it was 600 grand 575 grand for all 4 cottages. And it was worth 750 maybe. But this was right in lockdown. So the owners just needed to exit. And so I was picking it up for that. Anyway, then we got into earlier this year, and all of this talk about staycation and this holiday industry is going to boom. Airbnb are flooding the market with content about how it's going to be amazing. And then I get this call from my lawyer saying the sellers are pulling out because they want to do it for themselves. And so that would have been that was something like a 60 grand, 70 grand a year.
Easy. Yeah,
profit.
We had similar so we were targeting kind of B&B owners back end of last year, thinking, they'll be sick to their, back teeth, and might just want an exit, especially if they're a bit older. And we would then, knock them into an apart hotel without a change of, you could do that without planning. So perfect. And then, as you say, then the newspapers start rumbling this like massive boom, and all of a sudden they go, oh, well, I think we'll just hang on for another year or so and see what happens. But I think one thing one thing property owners don't really understand is you could run an SA business in your property. You can get all the tax benefits and the capital allowance benefits. And also you can employ a management company and you'll still make more money than an AST.
Yes.
You know, it is a powerful strategy if it's done right and you've got a property in the right location. So whilst SA is quite hands-on, if you're doing it, you can still, if you own the properties, you can still make a chunky profit by literally being, sat back saying, you just take care of that, please. You're the specialist at it and crack on, just send us me money each month. And most people quite enjoy that sort of structure. So, but yeah, I mean, I could talk service accommodation all day long, and I'll probably talk about far too much, but I do love it as a strategy. And, we've recently sort of moving out to Dubai, and I also have had a few phone calls about some sort of more villa opportunities in Europe, which I think is going to be big money post this pandemic. So we'll see how that plays off. But we've actually got a question. So for those who are starting within the BRR property strategy, what would be your top tips or your biggest lessons you've learned if you were to start again?
Not to wait. So when I first started, I had cash available to me to invest. And so I've always been a property broker. Let me just quickly take you back before I invested. So I've always been a property broker through my letting agent, through my estate agent, where people want to buy investment properties, right? I've always done that. So I've bought hundreds of properties for clients, gone out, found them really good investment deals. I still do that. But when it came to me investing, for me, I had cash available and it was sat there doing nothing. And I must have viewed 50 properties and all of them were ticking my boxes because I do my due diligence before I go out to them. Before I even make the call, I do some due diligence. And I went around viewing these properties. All of them were ticking my boxes. Yield, yes. Demand, yes. Valuations, yes. GDV, gross development value, yes. All of them were getting ticked. Demographics for the tenants, rent values, exit values, 2-year strategy. So all of my properties have a 2-year strategy on them. Anyway, but I wasn't buying them because I was scared, right? What I was thinking was, this is going to be the house that the tenant doesn't pay rent for a year. This is going to be the house that I buy and the property market crashes. This is going to be the house that the roof falls off or the boiler explodes on day one. This is going to be where I lose, or the interest rates are going to shoot up here. This is the house that's going to cost me all my money. I'm going to lose everything. So I just didn't buy it. I was looking for that perfect one. And I say quite often in my podcast about don't chase a unicorn, buy a workhorse, because there's loads of them available and they're easy to find. So I didn't buy, and I waited and it got about 8 months or so, 8 or 9 months down the line. I hadn't bought anything. Cash is there waiting for me, doing nothing. And I thought, you know what? I'm scared of this. This is really scary to me, even though I've done it hundreds of times and I know what a good property is and I know how to buy a good house. This is really scary. And then I heard this little phrase, which was feel the fear and do it anyway. Yeah. And I thought, right, that's it. The next place that I find that ticks my boxes, I'm just going to buy it. And as long as I can make some profit, then I'm better than I am now. So making something is better than nothing. And then once I've got one under my belt, if some way down the line, I find a much better property, then I can sell this one and I can buy that one. But I've got to be making some sort of profit now. And the next thing I did, and sorry for waffling here, but just to answer that question, the next thing I did was that I was spending all of my time listening to as many podcasts as possible, doing as much training, as many webinars, reading as many books, just educating as much as I could. But what I was always doing was preparing. I was always preparing and never actually doing. And so I'm spending all this money on all these different books and what have you, but never actually doing the things that all these people are telling me to do. And pretty much all of them were saying to me, get on with it, go and do it. So my advice.
Yeah. Your top.
That was it. My advice basically is to is to get your first one done.
As I like the Nike slogan, just do it.
Yeah, right. That's it.
Just do it, and I see it time and time again where, they procrastinate. They've got the figures good on a spreadsheet, and by the end of the day, they turn the figures bad on the spreadsheet, and then they don't do anything with it. It's like, you actually had a good deal there, you just need to keep, I know, but and and this is where this game is not just about knowledge and getting on a course or a webinar. This game is very much about action and, taking care of things. That goes back.
You are right. You are right. And do you know there's another side to it as well that I wish I'd have done. So I spent a lot of time just watching other people's content and reading books and so on and so on and so on. Actually, if I go back now, I probably would have just got some sort of mentor. I don't do mentoring. I don't do training courses or anything like that, but I know a lot of good people that do. And I actually probably would have, if I didn't have my own property experience, I'd probably go and find a good mentor that is doing what I want to do. So if it's SA, go after Ryan Luke, get Ryan Luke involved. Thanks. I'm plugging you on your own podcast, but the point is that Ryan is you're doing what there are thousands of people out there that want to do.
Yeah.
So,
I mean, I've worked with mentors since 2017, and I still continue to work with them. Mine have not all been property mentors. In fact, this year is the first time I've only actually stepped into the world of a property mentor. Most of them have been sales, marketing, and but I will. If somebody's where you want to be, just pay for it and copy them. That simple. You'll get there so much quicker.
There's no point trying to reinvent the wheel either. I think to go back to your viewer's question there, what would I do differently? There's loads of different things, of course, but I'd get on with it for a start. I'd just get the first one under my belt, definitely. And I would definitely go and copy people that are achieving what I want to achieve. And you could be quite surprised actually at the different levels. If you go and start copying someone who's got 1,000 properties in their portfolio worth multi millions of pounds, start copying them, then you're probably not going to succeed, because they will have access to not just funds that you don't, but also developments and projects that you don't. So you want to find someone who's got 20 properties, copy them. When you've reached what you want to reach with them, go and find someone who's got 100 properties and copy them, and so on and so on and so on. I'd also probably say, sorry for waffling again, but I'd probably also say is start learning about actual investing, not just property, because there's so much correlation there.
I think money mindset and money management, I mean, that comes back to exactly why you procrastinated. Your money mindset wasn't there. You couldn't pull the trigger. And that's super, super important. So what's on the cards for you now? What's next?
Next for me, still buying. I think this the property brokering thing is going quite well, so I'm probably going to carry on doing that. I tend to do so. Look, I'll give you an example. There's a load of people that don't know what sourcing agents are around, don't know how to. If a sourcing agent brings you a property and you don't know, you're not hugely experienced in that area, you don't know what's a good property deal or not. You don't know what someone's just trying to flog you and what they're not. So I kind of act as that little bit of due diligence between. The investor doesn't pay me. I've got deals with the sourcing agents who give me a little intro fee for a good buyer. So I'll probably carry on doing that and introduce properties to people that want to invest. I'm going to buy a few more serviced accommodation properties. Again, I'll have a 2-year strategy on them. All of my properties have a pretty detailed 2-year strategy, and with a review on that, because I think we're going to have 2 years of absolute rocket fuel in the SA industry, maybe longer, who knows. And outside of that, I'm carrying on growing this business. Again, like we were saying at the beginning here, it's all like a wildfire, really. You start learning how to invest your money correctly, not just in property, but in your business too. and you start learning how to look after your business and grow it, it makes you more busy, but you're having more fun at the same time. You can start doing things with your money that maybe you would have been a bit too cautious to do beforehand. What about you?
Yeah, no, same. I think I've pushed quite heavily in the development space, so we are currently got quite a bit under offer, and I've got a lot of offers in there, and we've got a big 16 apartment development in planning. So with serviced accommodation, I've figured out that multiple units in one location is the piece de resistance, as they say, and so that's kind of what I'm focusing on buying now. I'm not really buying any single dwellings, so we're just kind of looking at these developments and excited to get that going. And the only downside is I am a very impatient person, so the thought of like 14 weeks to get through planning before you can even do anything like frustrates the hell out of me. But you know, I've just got to accept that, and I think you just got to have all these developments going through the planning process so that when they come out, you're ready to go again and again and again. And so that's kind of what I'm up to on the purchasing side of things. And
what about your podcast?
Yeah, podcast is, just weekly, plenty of guests, and get great feedback on it. And I'm speaking a lot on Clubhouse as well. I know you're on there as well, so doing a fair bit of speaking on Clubhouse. We'll see how that plays out. I'm not sure I'm as bought into that as a long-term platform as probably everybody else is thinking. I do think once the Android users have their wave of it, I think they'll then say whether it's going to go anywhere or not. But at the minute, it's a good platform. I think we all spent about 12 hours a day on it when it first launched, and we're probably down to about 1 now. But
I'm with you. Do you know what? I was going to ask you about Clubhouse then, because I still do my podcast, which I just do it just because I just really enjoy it now. I don't necessarily make money out of it. I get some business.
Mine. I just like talking to people.
Yeah, same. And look, it leads to things, doesn't it? If you want to network with people, go and interview them and stuff. But I
had Dick Sesh on yesterday, and he's a performance and fitness coach. So afterwards, I signed up to his performance and fitness thing.
There you go. No, that's it.
I need a bit of that, so I'll have some.
Yeah, it does just grow, doesn't it? The more people you speak to, the more people that are interested in what other people's opinions are about. So take property for an example. By the way, my podcast is The Anonymous Landlord, as Ryan very kindly mentioned. But mine's all about landlording, property investing for the purpose of being a landlord, right? So flip to lets, buy to lets, all that sort of stuff. But if you're a property investor, you're a property investor. And that's why I always pick on Ryan to come and do this stuff on my podcast, because if you've got a portfolio of properties and you want to start diversifying and making a bit more money, a bit more profit, you don't mind taking a little bit more risk, but because you're going to make much more profit, then serviced accommodation. I mean, that's what I'm going to get into a bit. And I watch loads of stuff that you do, Ryan, and I think, well, sod it, I'm going to get into that, But to grow that as well, there's loads of people out there. I'd be interested, actually. Who do you think I should interview?
Me again, and then that'll be a hat trick on your show, I think. Elon Musk, do you think you can get him on?
Well, that would be a challenge, but hey, that would boost the numbers, wouldn't it?
I think he nearly broke Clubhouse, didn't he? He went on Clubhouse and he was like, put the whole thing down. I think there was like rooms of people recording the main room back in this room, and I think the whole platform just like went. And that was quite early on as well. So I think I think the best guests are just ones that you can have a good bit of crack with. You talk about subjects that are interesting to your audience and interesting to us. I mean, hopefully most people can see that we don't see this as a job, and everybody else I network with and everybody else that, I do business with, this isn't a job for us. This is just like, we enjoy what we do. We can do it on our own time. We can push it in our own different way. I mentioned quite a bit, like I don't really get involved in the operations now of the business, so that side of it I've done. I've served my time and I've systemized and processed it, and that allows me to do stuff like this. And it allows me to do other things. I'm going to go and play tennis after this, and I can do what I want. And I think that's why property is so great, because it gives you that recurring revenue, no matter which strategy you do it in. And I think we're all just entrepreneurs, and property is our subject. And then property within that subject has a million different branches that you can do, whether it's flips, BRR, service accommodation, HMOs, the list goes on and on and on and on. And I think what we do as businesses is we evolve, don't we? So we start off, I was the same as you, like podcasts every single minute I was in the car, books and audio books. And I'm like, right, lease options. I've learned that this week. I'm going to go and try and get some of them. And then you're like, oh, BRI, I understand that now. I'm going to go and try and get some of them. And then you kind of, as your cash flow builds, I think you hone in on one strategy, don't you? So for me, it was service accommodation. I've got HMOs and I've got buy-to-lets, but for me, it was service accommodation that I enjoyed the most. I enjoyed the logistics of it. I enjoyed, obviously, the cash flow from it. So that's kind of become my speciality. But then as the cash flow is building, you're like, okay, well, single dwellings aren't serving me anymore, because for one, I'm sick of doing applications for solicitors and remortgages. So, if I can do one application for 16 units rather than 16 different ones, I know which one I'll be choosing. So, but then I think just naturally you evolve, and through that evolvement is, I think, dependent on where you're networking. So where I'm networking right now is with a lot of developers, new build sort of companies, people that have been, in that game for quite some time. So that naturally leads to conversations. You have your eyes opened a bit, but then you also know that if you have those problems, you can go back to your network. Or for me, I like one of them's, mentoring, so I can just go to them and say, is this right? Is that wrong? And, and it doesn't matter like I thought I was experienced until you meet some of these people. And you're like, oh yeah, I know absolutely nothing about property, but then you go, but I want to know it. And if I get to know it, I can then start doing these like hundreds of million deals, never mind just like the little ones. And I think it all becomes a stepping stone, but it doesn't happen overnight, and you've got to evolve. You've got to evolve. And I think you can have some quick wins, don't get me wrong, rent to SAs and rent to rents and things like that. You can have some quick wins, but the long-term gain of, millions in the bank account, or, roll rent rolls of, 50, 60, 100 grand a month, that's going to take time to build, but, you can get there. You can't I think the good thing about property is every man, every woman, can get there. We've got the ability. Everyone's got the ability to get into property. Half the time you just need to talk a bit of sense and get on with people, and you can get stuff over the line. You don't need to know the ins and outs of it all. I mean, I think back to my first Airbnb unit. I didn't have a clue what I was doing, but I just went with it,
Yeah. And you don't have to be highly educated, certainly not in property, because you can apply any skill set that you have just in your natural life. You can apply that same skill set to property. Everyone's bought something from a shop before. Yeah. Everybody's used that product that they bought from a shop, and it's no different. If you're going to go and buy a property, have a look on Airbnb and see what other properties similar to that one rent out for. And now you know that you're going to get £100 a night for that property. Now talk to a hotel manager and local hotel manager and find out what their occupancy rate generally is across the year. And if they say it's normally about 70%, then you know that generally speaking, you're going to get £100 a night every night, 70% of the year. So that's your income. And now if you work out that I want to make 20% yield on all my cash, so you might invest in a property that's going to generate you the right income at a nightly rate at 70% occupancy, that's going to return to you 20% on your cash that you will have invested in that property. And I know that I've probably just explained that really simply there, but what I guess I'm getting to is if you want to make 20% on all cash that you ever invest, how much cash have you got today? If you've got 50 grand cash right now in your pocket, you could buy a £200,000 property, and you now know that you're going to rent it out for £100 a night for 70% of the year. So that's going to be, what's that? Let's work it out very quickly. It's going to be about 28, 30 grand a year, right? Something like that. So you now know your 50 grand cash is going to generate you 30 grand a year. That's good enough for you. That's good enough for anybody, right? Simple as that. So once you then work that out backwards. Just go and find the places that are in good areas that are going to attract good holiday people and go and buy that property, or keep preparing and let someone else do it.
You should start mentoring.
No, do you know what? I've been asked a lot of times to mentor people in property investing and landlording, and not so much landlording, but property investing. But I don't know. I just feel like it's something that I don't want to do.
No, I think you've got to be there. I mean, I didn't really want to do it. Well, it just wasn't on my radar, sort of 18 months ago or whenever. And then my plumber asked me if I'd help him do what I've done. So I was like, yeah, all right. And we started getting results. And then it just kind of went from there, really. But let me just, I'm just keeping this audio echoing. Can you hear that?
I'm not hearing an echo. No, it seems all right to me.
Oh, maybe it's just me. Oh, well, if you're not hearing it, then it's all right.
I might do. If the price was right, someone wanted me to mentor them, I might do. But
I think if you want to do mentoring, and I think that's the great thing about the game now is you can accelerate your journey. You can just, like, for me, for example, now, like, rather than me now going back to the books, I can just say, there's some money. I want you to teach me how to do this, and I want that end result. And they're like, well, it's going to cost you that. And I'll go, right, that's fine, because that's an investment in me, and there's an ROI on it. And I think the more I go through my journey, I realize I can just pay for things now to get further ahead quicker. And, and that's really been a game changer for me. And that goes for staff as well, rather than seeing them as an expense, I imbue them as an investment. And that allows, the business to scale further. But I think with mentoring, you've got to, because it gets quite a bit of criticism, but I go all in. Like, I love it. I actually do enjoy seeing, like, my plumber actually sent me a text the other day saying, I've got 4 going through conveyancing. When they complete, I have £1 million portfolio. 18 months ago, we knew nothing about property, So it's that sort of stuff that you're like, yeah, that's why I do this, and you're changing lives, and it does get a bit of bad press. But if you go all in and you really want to make a difference to people, you can make a difference. But you do have to put the time on the table to do that, and there's the structure and how you deliver it, and everything else that needs to go with it. So, but everybody can help somebody, and if everybody did help somebody, the world would be a lot better place. But there's not, but you don't necessarily have to charge for it all the time. But if everyone just helps someone get further ahead, then we'd all be in a better place. And that's kind of why I.
Here's a good question for you then, mate. If I've got 50 grand cash right now and I want to get into service accommodation, but I want to be an anonymous landlord about it, and I don't want anything to do with it, and I just said to you, here you go, Ryan, here's 50 grand. I just want 20%. What would you do?
I'd say, sod the service accommodation. Let's go to Vegas when the plane's back. I'll stick it on red and see what's what. I definitely wouldn't. Yeah, I mean, if you had 50K, I mean, I don't do deal sourcing because I get asked all the time, but I feel it's a conflict of interest because I can, if I find a good deal, I'll buy it myself. So I don't feel like I'd ever want to pass that on. But I'm in that position, fortunately, where it's not about I've got money to buy the deals. So I understand why people do deal source when they can't fund them themselves, and I totally get that. So that's not my business model. But what I would do is I would probably hook you up with a deal sourcer such as yourself and say, here's going to find you a property, and then we'll manage that property on the back end and get you the return. So I do have connections with deal sourcers who've come to me and said, can we tie up with you? We want to be able to demonstrate to our investors that we can get more out of the property using your services, and obviously the deals are then more attractive and therefore they sell more deals. So it's a win-win for everybody, and that's what I think is great about this industry, how you can have each person takes care of their own units. The alternative would be, if it depends how involved they wanted to get. If someone had 50K, I would potentially say, if they're willing to put the work in themselves, I would almost siphon some of that money off and go and set up 10 rent-to-rent SA deals to start off with and just generate a load of cash flow back in. And then that also will create quick cash flow. And your 50K, yeah, it might dip down to 30K, but but within 6 months, 7 months, it would be back up to probably 70K, and then all of a sudden you made a healthy return quite quickly, and you can then start, because that's what I did. I was buying slowly, and because the money wasn't quick coming back in, then I discovered kind of rent to rent. I went mental on it. The cash flow went, skyrocketed, and then I kept pumping that back into assets. And then the asset portfolio, all of a sudden, I woke up one day, I was like, Jesus Christ, I own quite a bit of property, without even thinking about it, because I was just on that wheel of just kept pumping it back in. And I still to this day continue to take rent to rents on, and use the cash flow to buy more assets. And so you can kind of link strategies together to make them work, but you've got to know what you're doing to be able to pull it off. And I think that's the main thing, is you've got to know what you're doing.
Yeah, it's an interesting point about sources as well. I mean, now the properties that I pass on to other people are the ones that I don't want. And that doesn't necessarily need to be a negative thing, but because I've built up that network now of sources and those types of people that bring properties, I can be fussy. So now I get offered enough 20% plus deals as a yield on my cash, 20% plus deals, that I can just have them for me. And anything that's above, say, 10% for a beginner investor, anything over 10% is a really nice deal to get you started, right? Just as I'm talking about standard buy-to-lets, maybe the flip-to-lets as well. But generally speaking, the average property that I'm now passing on is about 14 to 15% return on the cash. So good deals, but just not enough for me anymore. And I expect that if you're a beginner investor, you start doing this for a number of years, you build up your portfolio, you'll be the same, where you're not going to start going after the 14, 15% as you're going to want 20% plus. But you've got to start somewhere, right? And so you're absolutely right. I've built this little network of investors. I don't work with everybody. I keep it quite small. Otherwise, you get a lot of people asking you, have you got another property yet? Have you got another property yet? Whereas I keep that quite small. So when I'm offered one that doesn't tick my yield box, but it still is a good deal, then, you pass them on. And it's a fun way. Like, go back to what we were saying earlier on, networking is key. And the more you do property, the more properties you buy, the more people you meet, and the more your network grows, and the more deals you'll get.
Yeah.
And the only reason I asked you that 50 grand question was because before this, I had a call with a couple that want to invest, and they had 50 grand. And they said, what would you do with 50 grand, Tom? And I went on for about half an hour, I think, waffling on about bloody yields and flips and growing cash flow, managing money. So I do things like, for an example, if I buy a property and I start getting rent profit coming in, I use that rent profit, I invest it in other things short term, put it back in my investment pot, and the whole management.
It depends how you are, doesn't it? 50K is not going to go very far in central London, but you could buy probably a street in Newcastle somewhere. There's like it's totally different. And I have this conversation, funny enough, I had it with a couple of mentees this morning. They're down south, and they're like, we want to start buying assets. They've had a great rent to rent run over the last 6-7 months. They're in that position, and they were like, where should we buy? And I was like, well, how much have you got? And they're like, this. I was like, well, north's probably going to suit you better. And they're like, but we live down south. I'm like, well, sometimes you've got to travel. You are allowed to leave the south.
Yeah.
It's not place up here. It's actually quite good. Most people love coming out of Newcastle for a night out. But no, I think it's whatever it depends on how involved you want to be, how much you're willing to travel, how much time you've got. There's so many different questions to be asked to be able to say that's the right solution for you. And everyone's different, and I think you've just got to kind of work with everybody on an individual basis and say, I think that's the best advice for your situation given what you've told me, and then you try and make it work between everyone. But there's so many different ways to spin this, so many different ways to spin it. And if your investors want higher returns, you could say, well, Ryan can actually run your portfolio for you, and they can run it on SA and this, that, and the other, and that's another way to like say, okay, well, how do we turn a 14% yield into a 25? same property, same purchase price, just a different exit strategy. And, so there's so many different ways to do that. But then you might get someone say, well, I'm all right with 14 and I don't really want to try that 25% stuff because of X, Y, Z. And, it blows my mind when landlords are like, I'd rather take the tenant on than yourselves because obviously it's safer. I'm like, have you seen this far before? Have you had tenants that don't pay rent and you can't do anything with them?
Yeah. But you've got to calculate it on risk, haven't you? The fact is, if you're a landlord and you're referencing a single tenant to move into your property, and that one tenant entity says to you, well, you've got two options, right? You've got tenant A and tenant B. Tenant A earns £20,000 a year in a standard job, no problem. Tenant B earns £1 million a year because they do hundreds of rent-to-rents. You're going with the tenant that earns $1 million a year, right?
Well, yeah, that would be the logical tenant choice, but
right.
How many don't? And they're like, oh, well, I don't want the wear and tear on my property and blah, blah. And you're like, would you like to come and see some of our properties? You can like, I actually said to anyone that's a bit hesitant, now I've got the portfolio, I just say, listen, that's empty, that's empty, that's empty. There's the lockbox codes. Go and check yourself in and have a look at the condition we keep those properties in. And they go through the first door and then they ring and they're like, yeah, okay, we'll go with you.
It's like a hotel room, isn't it?
Yeah, exactly. We can't supply a product to guests unless it's in tip-top conditions. So we have to keep it like that all the time. And but people don't like change, right? And that's what it comes down to. Some of these landlords have been doing it for like decades and decades. They're just so used to getting their rent roll and they're quite happy with it, and they just don't want to change. And that's but that's why the world's a magical place, because if we're all the same, it would be boring.
You know what? It's one of those things. Serviced accommodation is really exciting, and it's just made me think. My company, my letting agent, has a rent roll of a good few $100,000 a month, and I start looking at that and thinking, hold on a minute.
Can I get like the $500K a month?
Yeah. Well, where are you in 5 years, mate?
Retired, on a yacht, doing bugger all.
Nice. Do you say you play tennis?
I do, yes. I do.
Do you? Are you good?
I'm all right.
I was going to say I'll come up and give you a game.
No, come on, give me a game. Come on, give me a game.
Yeah, I'll come up and give you a game.
I used to be a very good golfer, but I kind of fell out of love with golf a few years ago, and I've sort of picked up tennis, and I love it. There's literally an LTA club at the bottom of my street here, so come up next time you're in the Northeast, bring your racket, we'll have a game and a few beers. Yeah,
I'm well up for that. We might have to do a trade-off then. We'll play a game of golf and a game of tennis. Winner takes all.
Loser buys the meal.
Deal.
We'll be able to eat out by then, hopefully.
Yeah, so, I'll be up in the next few weeks, so I'll definitely I'll put my head around the door. We'll book something in, and we'll have a game.
Yeah, no, don't make sure you don't get a nosebleed on the way up, though, eh?
I'll have to wear about 3 coats, I think, up the north.
I thought it'll be all right. Yeah, no, let's do that. So, hey, as always, Tom, great show, great episode, great to chat to you. How can people find you if they don't know already?
Probably the best way is through Facebook. It's just Tom Pink Street, or listen to my podcast, The Anonymous Landlord. It's on all the platforms. I'll probably have Ryan Luke episode 65 at some point soon. There's hundreds of episodes on there, and have a good listen. There's even an interview with the infamous Samuel Leeds on there. That was fun.
Yeah, I haven't listened to that actually. I might give it a whirl. But
yeah, he's entertaining.
Yeah, I can imagine. So right, Tom, I need to shoot. I'm sure you need to shoot. Absolute pleasure as always.
Thank you, mate. Thanks to everyone as well. Take care.